Swiss National Bank has just announced that it will provide Credit Suisse with liquidity if necessary to help mitigate risk of further contagion and bank runs globally. They also gave the market a dose of confidence by reassuring that Credit Suisse meets the capital and liquidity requirements imposed on systemically important banks. But what does this mean for Swiss National Bank, and does it pose a risk to Tesla stock? Swiss National Bank owns almost a whopping $2 billion worth of Tesla shares, which puts them at 0.3% ownership of the company. While they started buying Tesla shares all the way back in 2013, 70% of their very sizable position in Tesla was bought recently in November 2022. Currently, Tesla is the 13th biggest holding in their portfolio, but it was actually the stock they sold the most of this quarter, which indicates that it could be the go-to stock for them to sell if they need liquidity. They sold around 5.5% in February last month. The worst-case scenario here is that Credit Suisse faces closure and Swiss National Bank has to sell their Tesla holdings to provide the liquidity needed to ensure that Credit Suisse doesn't go under. But is Tesla really at risk? In the short term, sure, anything could happen to the stock price. But Tesla as a company is much better positioned to withstand a brutal recession than anyone else in the industry and even benefit from it over the long run, as not all competitors will be able to see it through. Competitors are fighting against the major trend of declining sales of internal combustion engine vehicles, which are being replaced with battery electric vehicles. Tesla has industry-leading margins and only $44 million of total debt, excluding vehicle and energy product financing. This is a stark contrast to their competitors who are drowning in debt, and that debt has gotten significantly more expensive to service with the Fed's record-breaking interest rate hikes. Tesla also has over $22 billion of cash on their balance sheet to be able to weather a harsh economic storm. Their board of directors have been holding off on a stock buyback with that cash because they know it will be better used to build new gigafactories and ensure their financial safety during these shaky economic times.